up, guys? Todd here. This is the free video. This is going to be shooting this right after the close here, Tuesday, June 6th for Wednesday the 7th. So a couple things. I got a good question about the ending diagonal in the S&P, diving into the Elliott Wave a little bit. So I'll take you over to the charts. We'll do that. Related to that, with our members, we started to book some profits in our longer term tech positions. Like, there's like 10 stocks driving this market right now. It's all about some tech, big cap momentum names that are pushing the stock market higher. Like, everything else is just completely lagging, like the Russell specifically. So I want to show you that. So we booked some profits in Facebook and Nvidia today. Closed out crude oil. I think that's it. Also, Bitcoin, a lot of good feedback on that last night. So I'll show you that in the Bitcoin. Actually, I'll do it on the charts over there. Let's talk about Bitcoin. And then one thing before I go. Guys, do you want a book recommendation? Oh my God. This book kept me up for 3 days straight. I got this recommendation from Casey Neistat, The American Kingpin by Nick Bilton, who actually wrote me back on Twitter, which is cool. He's a fellow CNBC contributor like me. What's up, Nick? So this book is about Ross Ulbricht, who is the founder of Silk Road. On the dark web, you can buy and sell drugs and guns and body parts and all that crazy stuff. You guys want a crazy book? Go check that one out. That one will knock your socks off. Do you guys want to see what it looks like behind the lights, like what it's like to be on TV? Like, it's pretty bright. Check this out. So here's my green screen. Here's what it looks like. I guess it's a 5-point lighting system, right? So this light up there is meant to light you. That light over there also meant to light you. Then you've got one down here on the floor next to my little podium. This one lights the green screen behind me. This one also lights the green screen. And then this is your overhead light. And this one is supposed to, like, when you go against the green screen, when you have that overhead light, that makes the chroma keying take away, like, the green bounce back. I don't really know if the lights are doing it full on justice. It looks like this lens is doing a good job kind of filtering it out. So that's that. Oh, hey. All right, we're good. Enough screwing around. Let's dive in. So before I jump into the Elliott Wave count and S&P and Bitcoin, let me just talk about a good question I think Raj had about the distance of Wave 3 within a good 5 Elliott Wave. Oh, the kids are coming. They're definitely going to jump in the middle of this video. A good 5-wave sequence. So the first thing, let me just kind of draw out this scenario for you. All right, let's just do this. So a traditional 5-wave move, guys, looks like this, okay? So in any good trend, you should be able to see 3 trend waves and 2 corrective waves. So here's your first push. Let's say we had a long decline, market was getting smoked, and then it rallies up off the low, okay? Everyone's convinced that this is just a short-term rally before the longer-term downtrend continues. Okay, so then we get a push down. Usually that goes into anywhere from a 50% to 78% retracement of what we just saw in the prior rally. Then we get a big move, and everyone's like, whoa, what the heck just happened? I thought we were going to new lows. You get bottom picking longs coming in. You get the breakout crew getting involved here. Whatever the fundamentals of the underlying economy are, or this even happened in the 60-minute chart or 30-minute chart. This kind of psychology permeates through the market. So all of a sudden, everyone who's convinced that the market was going to break to new lows is getting stopped out. Then you get the momentum guys, and then you get the breakout guys, and then the latecomers, and eventually that buying will settle out. Then we settle into a good sideways consolidation. Everyone's like, okay, hold on, what just happened? Hopefully you can't hear the kids fighting over here. I need an office soon. I don't even have time to find an office. Guys, shh, daddy's doing work. You can't be too mad at them, they're so cute. So you get the 4th wave consolidation, okay? So you get the people taking profits who saw the opportunity on the way up, so they're selling into it. And you get the people who are trying to scoop the lows, who missed it, trying to buy it. So you get sellers up top, buyers down below, and then you get the range traders. And people like to sell a lot of option premium involved there.
finally get the fifth wave move up. And this creates all kinds of divergences, both a fundamental and a momentum divergence, whatever kind of technical indicator you look at, right? So fine. So in a good 5-wave sequence, it unfolds like this. This is a good, healthy 5-wave trend. And as a side note, those of you who've done any studying of the history of technical analysis, Charles Dow, grandfather of Dow theory, founder of the Dow Jones Corporation, like, you should know him. You know, he was really the grandfather of technical analysis, and he showed us, he gave us Dow theory, which also includes not just, you know, your transports confirming where the Dow industrials go and all that, but he also showed that there was 3 phases of a trend sequence. Number 1 was your accumulation. The insiders are involved down here. Then you get the widespread participation breakout. That's the second phase, or the third wave in the Elliott Wave sequence. And then the final trend push is called distribution, which is wave 5. So that's the third and final trend phase. That is distribution. Early coming longs here and here are feeding the ducks out there in wave 5. And unfortunately, that's where the retail crowd gets involved. And then you get some sharp setbacks, stop everyone out, and then the pattern begins again. So that's a good 5-wave sequence, okay? So let me just clear this out, and let me just redraw this 5-wave move, okay? So here's that 5-wave move that I just drew. Now, if this is a daily chart, okay, let's say this is a daily, like it is. This is S&P on the daily. And let's say you want to get down and look at the internals of each of your trend waves, 1, 3, and 5. Okay, excuse my ugly numbers I'm drawing with my cursor. My pen is broken. Okay, so if you look inside the daily down to like a 2-hour, 3-hour chart, in a third wave, you're looking for this same pattern right above me, okay, inside the third wave. So you're looking for a 5-wave move inside of 3. And it should look the exact same, but you're going to need to go to a smaller time frame chart to see it. So it should look like this: up in 1, down in 2, up in 3, down in 4, up in 5. Your trend waves, which are 4 and 2, should not touch when you're in a higher third wave. They can and often do touch when you're in a 5th wave. Okay, a 5th wave also breaks down into a 5-wave move, but at this point, the market has come so far, so fast, it's exhausted, and what happens is you start struggling to get separation between those trend waves, between those corrective waves, 4 and 2. So you see how there's a little bit of overlap right here, 4 into 2? That's called a diagonal. And that often happens, it doesn't often happen. It can happen when it's a higher degree wave 5 like we have here. A diagonal is specifically going to look like this: up in 1, down in 2, up in 3, down in 4, and a short little 1 in 5. And that usually completes a 5th wave. When that happens, look out below, because the market might get smoked. So the question Raj had last night, he's like, I thought the third wave should be a 1.618, which is your Fibonacci golden ratio, a 1.618 relationship, distance traveled in wave 3 compared to wave 1. Raj, yes, in a traditional impulse, which that's what this is, IMP, right here. Okay, a good 1, 2, 3, 4, 5. And let me just fill in the waves. 2, up in 3, down in 4, up in 5. That's a good, clean, healthy 5-wave Charles Dow ripper. When you get these little consolidation patterns that start to show hesitation when it's a higher degree 5th, that's what you call an ending diagonal. That's when you start seeing wave 1 be the longest, wave 2 is a drop, wave 3 actually can wind up being shorter than wave 1. There's your overlap in 4. Here's 4 and 2. You get overlap between the two. Okay, 4 moves into territory 2. Then you get a short little move up in 5. So in a diagonal that's showing market being very tired, that's when you start getting wave 1 being the longest, wave 3 being the middle length, and wave 5 being short, and that sets up a significant drop. That's called an ending diagonal. There's two kinds of ways a market can trend according to the Elliott sequence: impulse and diagonal. And that's it. So as we go over to the S&P, here's what I think's happening. Okay? This is the daily in the S&P. We have a wall of resistance above us in this fib. And I haven't gone into the fib too much, but there's a huge wall of resistance, 2422 to 2465. So here's what's happening. Okay? If we fail anywhere inside of this zone of resistance, remember, in a good, clean impulse, 4 and 2, the corrective waves need to be removed from each other. Wave 2 starts here, which means wave 1 ends here, wave 2 starts and ends there. So that's the boundary of wave 2. This wave 4, if we do hold this zone of resistance and you start to get a drop towards 2400 and you get the overlap of 4V2, that creates an ending diagonal, okay, which means long 1, down in 2, medium length 3, short 5, and then good night Irene. I haven't shown you this, but the higher degree is green 5. Okay, this green 5, which now I'm showing you, could possibly trace an ending diagonal, which means, you know, we could have a shorter wave 3, down in 4, up in 5, and then it drops. That's only if you get the overlap here. If you don't, that's fine. We can still see a significant top, but the count is just going to go like this. So down in 4, we don't violate wave 2 area, then we move up and we're still going to get smoked. But if you trace out a diagonal, that conveys a market that's very tired, is going to have a hard time continuing on, okay? So really, really important. I'm long, as I mentioned, I've been piecing out a longs, short Goldman, long bonds with customers. So we're getting ready for this test, whatever trend form it wants to take, either a diagonal or a trend wave. Bitcoin, I know this is a super long video. No diagonal here, but a good wave 3, which is your impulse, okay? A higher degree third, okay, which is green parentheses. So your higher degree third is an impulse, which means waves 4 and 2 are removed, which clearly that's the case. You go up in 1, corrective wave 2, nice move up in 3, corrective wave 4, and then we're looking for one more push up there in 5, and at some point, you know, maybe we're going to do the 3,000 run, then it's going to drop, give us that wave 4, and then move up in 5. So green 4 should move into the territory of green 2. Okay, so it's fractal. Elliott's a big kind of accounting system for where you are in the trends and sequence. It's really, really awesome. Once you get into it, it's so addicting. So I'm still long Bitcoin. We added the Bitcoin ETF with our customers. Crazy, like $500 stock. It's insane. Really moves. So that's it, guys. Super long video. Let me know what you think. If that made any sense, thumbs up. We are traveling tomorrow, going to Denver. I got a bunch of family in Littleton in Denver. My grandmother's 90th birthday. Happy birthday, Grandma. Woohoo! She's rocking. So we're going to see her. And that's that. All right, see you guys. Take care.